All right. Today, I want to start out looking at the Dow Jones, and I do want to ask the question, is the sector rotation finally complete, or do we have more sector rotation to come? And we will look at all of the charts necessary to answer that. And the first thing I want to show you is the Magnificent 7 tech stocks, which I call the mega cap tech or the big tech, got absolutely destroyed today. And this is the topic that I've been focusing on during these video updates, and especially in the Discord server, is that there was no need to be looking at tech stocks right now if you're a bull, while we have so many opportunities in other sectors that are just now starting to break out. And if you were a bull in big tech today, it was a very big bloodbath. And if that's all you have on your watch list, you are probably thinking the market is extremely bearish, but that could not be farther from the truth. This is all just money leaving the tech companies and going into other sectors, which is very evident by the Dow Jones going up 0.55% today to a brand new all-time high, blasting through that price target at 411 and well on our way towards the next price target at 415. And remember, last night I upgraded my price target and I told you this was buy all dips above 407 for the next price target at 415. Now again, I'm not putting any limits on how high the Dow Jones can go. If we break through 415, we'll be looking for 420. And as I've told you before, there is a ton of buying volume on a bull breakout, and there's still a ton of bears trying to short the Dow Jones. So do not for 1 second think it can't go higher. It is likely going to continue to go higher. And there is no way with the Dow Jones breaking out to brand new all-time highs that we can say the market is bearish. So first things first, if you think the market is bearish, that is because you got caught in a sector rotation out of tech and you only look at tech stocks. This is still a very bullish market. It is just not a very bullish market for tech companies right now. To further hammer home this point, we're going to jump over to Berkshire Hathaway, which once more was up 1.53% today, making brand new all-time highs and just continuing to go up in a vertical line on all very decent buying volume. And again, this is a multi-month consolidation breakout of over 5 months of going absolutely nowhere, and that is why this is such a bullish breakout. So when we're talking about is the sector rotation completed, the first thing we need to look at is the sector that money is leaving from. So next we're going to jump over to the triple Qs, and on the triple Qs, I did tell you I was not bullish on this thing. I was actually looking for it to break down towards 478, but I do think I was a little too aggressive on that downside. There's a good chance we could find support just a bit higher than that. And the other thing I want to show you is that this was broadcasted on the chart before it happened, and you can see right here in the Discord server where I said the triple Qs were likely going lower and that some kind of news event was going to take the credit for it. There was no news event that caused this to happen. As you can tell from this update on your screen right now, I called this before it happened, before I ever saw any news. This was 100% broadcasted on the charts, and this was 100% part of the sector rotation theme that we've been talking about. So I want to spend some extra time on the triple Qs today, because if this is the sector and this is the index that money is leaving, we need to try to figure out when that money is done leaving and when we are likely going to find support. And if we look at the volume on the triple Qs today, we had very high volume selling as we were expecting on a breakdown below 491, and we gapped down below 491, which is a breakaway gap. And when you get a breakaway gap below a risk level, that is a risk off indication, and that meant there was a very good chance we were going to 485. But I told you in the past I didn't expect 485 to hold. While that was a good opportunity to get low risk long entries, the real price target that we're looking for is closer to 478 to 480. So very quickly here, I do think the sector rotation is coming to a close. And the reason I believe that, because we've already seen a lot of the money leaving the triple Qs and sellers will get exhausted down here near support. So my preferred scenario is that we are going to find support somewhere between 478 and 480, and then try to bounce to close this gap up here right around 493. And this is the scenario that I prefer, but as I always tell you, you should be prepared for all scenarios. And there is a scenario where this support fails and we just come crashing down towards this gap fill at 468. And if you remember back, I told you this gap fill was a 100% guarantee that it was going to fill, but we have no idea what time and what time frame it's going to fill. So it is possible if we lose support here, we just continue to flush down and go close that gap now. However, what I prefer is that we would go up here higher first and put in another lower high, and then from there we could get another lower high rejection and then come down and fill that gap. And that scenario I think will hurt the majority because a lot of people will miss the rally higher. as we go up to close the gap. As we're closing the gap, there's a good chance they're going to get bullish just in time for another lower high rejection to fill this gap at 468. And the market does love to fool and hurt the majority, and that could very well be what hurts the majority. We're going to have to watch the price from here to find out more information, and as always, let the chart do all the talking. So the chart is doing a ton of talking. There is no denying that this looks risk off, although we are at very strong support, which could be a sign to get risk on. But once more if that support fails, that is going to be another risk off indicator that we're likely going down towards 468. So if you look at this rejection from an all-time high and the lower high, we were getting the all-time highs in the S&P 500 and the Dow Jones while the tech sector was putting in a lower high. And that is how I was able to predict sector rotation and the fact that the NASDAQ 100 was looking weaker, which meant we were likely going to get that lower high rejection. It was all on the chart and the price action did all the talking. All I did was read the chart. So that is what I'm teaching you to do, is read the price action, have no bias. I couldn't care less if we go higher or lower. All I want to do is make money and get the best risk reward setups with the best probability to win the trade. And right now, I cannot deny that the bulls have a damn good chance to win here if they buy at this support, especially with that gap fill above and the very powerful bull trend as long as we're above the support trend line. So 478 to 480 is a very critical support. If we break below it, that is another indication we're going a lot lower. So do be aware of that and watch the price action and let it do all the talking. Next up, we'll jump over to SPY, and SPY did get rejected from that all-time high price target at 564. We did gap down, so we have a gap up here at 562, and we did not get the risk off indication. So I'm going to redo some of these arrows. We got the pullback and we hit the all-time high price target, so that trade has completely worked out. But what we haven't yet seen is SPY going to get risk off and break 556, or are we just going to get another higher low and continue a bull trend, fill the gap at 562 and head higher towards 569. This is very possible if the sector rotation is complete and the tech sector starts to get bought up while these other sectors are going higher as well, because you have to remember the S&P 500 represents multiple sectors, which includes the industrials, financials, healthcare, and tech sector. Now there are other things in the S&P 500 like energy, but they are very low weight, so we're not even going to talk about them. But when we look at the possibility that above 556 we can make another brand new all-time high by the end of the month, this is another indication that there's no reason to be panicking and starting to freak out unless we start to break down below 556. And even then, you shouldn't be panicking. It should be part of your trade plan that if we break support, you're getting risk off for a push down here towards 548. So I think SPY is very simple. Risk on above 556, risk off below it, and do not rule out the possibility the strong bull trend just continues to push higher. On the Russell 2000 IWM ETF, we were down 1.05% today, and we did hit the price target right around 226, and we were just a little bit away from the price target at 228, which if I zoom out here and I give you a bigger picture view, that is where I thought the small caps were going. And as of the intraday high, we were only about 0.8% away from it. So we were very close. And we are still outside this upper Bollinger Band. So even if we do get a pullback towards this support zone between the gap fill at 218 and the breakout at 220, there's still a good chance we're just going to continue to push higher within this bull trend and hit the price target. So there's nothing on these charts that tell me the market is bearish. If anything, it's only confirming that we had sector rotation out of the tech companies and out of big tech into these other sectors. If you look at this chart, these moving averages are very positive sloping with lots of separation and a strong bull trend, which tells us we're looking to buy dips in IWM at strong support zones. If we look at the VIX today, we did finally get the VIX zone right around 15, which is what we expect to see in the VIX while we're getting pullbacks. And as long as we don't see tons of panic and fear here, the VIX is likely going to stay down below 15 and crush yet again, which is going to fuel another bull rally. So right now I'm going to give you one more prediction that the VIX is going to crush and the VIX is going to come back down towards 13, and that is going to fuel the bounce that I'm expecting in the indices. Next, we'll look at Bitcoin, which is another good risk on indicator, and Bitcoin is holding above 64,000. And if we hold above 64,000, we'll be looking for 67,000. And I still think this is risk on while we can hold this breakout above 60,000. So from here, we'll look at XLI, and XLI, I did talk about this double bottom breakout, but more importantly, now that we're at all-time highs in XLI, we have a bigger double bottom in play, and that is as long as we're above 126, there's a good chance we're going to see buyers of the dip above 126 as we continue to push higher towards 131. And it's very hard to say that the market is bearish if we're expecting new all-time highs and very powerful bull trends. So if you think the market is bearish, it's because you're only looking at tech stocks. There is nothing bearish about a mega double bottom breakout that is likely going much higher, and the industrial sector is going to favor the Dow Jones. If we look at the financial sector, which is XLF, we did push through my price target at 43.5 and we're continuing to push higher. And again, these are not bearish indications. These are healthy for the market as a whole, which definitely includes the S&P 500. Even if we continue to see weakness in the tech companies, there are still stocks breaking out and looking very bullish. And I want to talk about one of those tonight, which is Lockheed Martin, ticker symbol LMT, which is just now starting to break through this multi-week consolidation where we've gone absolutely nowhere except sideways. And we are just now starting to break out of this range while we're above 471, which means we could see another very powerful push here. And again, there are tons of great trades in this market. As long as you know where to find them, it's not all necessarily going to continue to be in those tech companies that you're used to trading and that you're used to everybody talking about. There are other stocks in the stock market, and this is one of them that is starting to look bullish. And also, if you look at this multi-week consolidation breakout, it is all happening on higher lows and now higher highs. So again, there is nothing bearish about the market right now. There are only sectors of the market that are seeing selling in favor of buying others. So I don't want to make this video too winded or too long, so we'll jump back over to the S&P 500 and I'll just hammer home the point one more time. This was a sector rotation. We were all over it from the beginning and I told you exactly everything you should be looking for and what you should be trading, and I even suggested that you sideline those tech companies. So that is all now playing out, and there's a good chance now that it's playing out that it could also be near completion, which means those tech companies could find support and continue this bull rally, and we could get an everything rally, which is extremely bullish for the whole entire market. Before, we had a very narrow breadth bull market that the Magnificent Seven tech companies were pushing SPY and the triple Qs higher, but now we're seeing participation from the small caps and the Dow Jones, as well as many other sectors like industrials and financials and healthcare. And healthcare is another one of those sectors that was going higher today, continuing to push and break out bullishly that we didn't even look at. And of course, there's going to be plenty of other stocks and trade ideas in the Discord server highlighting the sector rotation theme. So remember, the market is still bullish. Don't get bamboozled and don't get tricked into thinking the market is bearish just because tech companies are going lower. Tech companies are a very important part of the market, but they have had a very strong bull rally and they are just now cooling down. And once they're done cooling down, they could continue to go higher, and this bull rally can and likely will continue to live on. So no matter what you're doing, manage your risk at critical support and make sure you have a trade plan prepared for either scenario, and let the price action on the chart do all the talking. Be an unbiased price action trader and you are going to be very profitable in this market. So if you want access to all of my trade ideas, that's going to be in my Discord server, and you'll also get access to my intraday updates and all of my technical analysis. And you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.